right, guys, thanks for everyone for joining us. So my name's Jonathan. I'm a tax manager here at Fullstack Advisory, and in joining me today is Director of Easy Super, Natalia. Natalia, thanks for joining us today.
Thank you for having me here, Jonathan. Thank you.
No, all good. So today we're going to be discussing self-managed super funds and crypto, or SMSFs, or SMIFs, or SMIFs, etc. Bit of a tongue twister there, but yeah. So crypto in Australia has grown significantly in popularity. Year in, year out, we're seeing a steady increase in the amount of Australians actually investing in super. So approximately 30% of all Australians actually own crypto in some sort of capacity at the end of the calendar year last year. According to Independent Reserve, approximately 90% of investors last year using their platform specifically advised of profits or even breaking even. So quickly becoming an asset class that most Australians own. It's quite appealing as well for most investors due to rapid growth and increase in wealth. So as such, the appropriate implementation of the right tax structures can save thousands of dollars in tax and provide greater asset security in the long run. So increasing again in popularity, is the utilization of self-managed super funds as part of an overall tax-effective group structure, due to how effective they are and the legislation, the tax benefits that the legislation currently offers. So we'll be discussing a bit more about that in detail today. Before we do, a quick disclaimer. So today's webinar does not constitute specific legal or tax advice. Our presentation today is based off of the legislation of today. So any advice pertaining to the presentation is generic in nature and may not relate to your personal circumstances. So big emphasis there on seeking your own legal and tax advice as it relates to your particular situation. So as I mentioned, my name is Jonathan. Fullstack Advisory is a chartered accounting firm that does specialize in crypto. We don't just do crypto. We do it great, but we do other things great as well. So we work with tech businesses, startups, e-commerce. We do R&D. We provide compliance advisory, VCFO services, and much more. Fullstack works with regular investors, hardcore traders. We've seen some crazy things. We work with people with 10 transactions. We work with people with transactions in the millions. We work with miners, gaming enthusiasts, crypto businesses, DAOs. We work for and with centralized exchanges. We're quickly doing the whole lot. But always our main focus is providing practical advice to all of our clients, and especially our crypto clients deserve a lot of love because it's a fantastic community and crowd. And the lovely Natalia.
Hi, everyone again. And my name is Natalia Clark, and I'm Director of Easy Super. At Easy Super, we specialize in self-managed superannuation funds. We don't do anything else. We don't do companies. We don't do individual tax returns, but we do self-managed superannuation funds, and we do it very well. I've been doing it for more than 18 years, almost for 2 decades, and I can say that I know everything about self-managed superannuation funds and superannuation in Australia. In the last 2 or 3 years, because of growth in popularity of crypto popularity in crypto investments, we started specializing a little bit with our crypto clients in self-managed superannuation fund. And we are happy to present you today because not a lot of accountants and self-managed super fund specialists know about crypto as much as we know about crypto in self-managed superannuation funds. And I'm going to share with you some tips and tricks today about crypto in a self-managed superannuation funds.
Thanks, Natalia. So a bit of housekeeping before getting into the content today. You probably imagined or found out quite quickly that everyone's muted for the time being, but feel free to send any queries or questions, comments that you have throughout the session using the chat feature. And always the webinar is recorded as well. So if you have to drop out or if you can't make the entire session today, don't stress too much. We can you can always review back. We should be able to send you a link. I think a link's going to be sent out to all our registrations today, but it should also be uploaded to our socials and YouTube channel as well. So you can always revisit our content today there. So today's agenda, we're going to be looking at the current registration regulations for self-managed super funds in Australia, the taxation specifically of crypto in a self-managed super fund and how it all works and operates, penalties and breaches, things to look out for, what not to do, etc. Record keeping requirements, big one. How do we keep adequate records? Some solutions to assist us in that process. NFTs or non-fungible tokens in self-managed super funds. What does having crypto in a self-managed super fund actually look like? And having a look at some other entity structures as well as part of a holistic approach to combating having a tax-effective group structure in place. So we're going to be looking at an overview of trust and companies in addition. Natalia, you lead the charge.
Yep, thank you. And we want to begin with regulation, superannuation environment in Australia. To begin with, again, I want to repeat my disclosure. So the information provided in this webinar is general information only, and we don't provide you with advice because we didn't consider your personal circumstances, objectives, and needs. I have to repeat it again for financial service disclosure, and this is just a general information. So in Australia, the SMSFs are regulated by the SIS Act and Tax Act. When we looked at the Tax Act, we looked at how SMSFs are taxed in terms of how much tax you pay in SMSF. And also we look at the SIS Act is how it is regulated. So what you should do and should not do in your self-managed superannuation fund. So for the regulation, SMSF regulation, what is very important to keep in mind is a sole purpose test. So when you think about self-managed superannuation fund and your superannuation in general, the only one purpose of super is to provide you benefits in your retirement. So when you invest in your super, you have to think about what I will be left with at my retirement. Am I increasing my super or I'm just playing with it? So for the self-managed superannuation fund, the most important part is the documents. Everything has to be documented, and we are going to talk about which documents you require when you want to invest in cryptocurrency in your self-managed superannuation fund. Also, in terms of the regulation and tax regulation, we look at foreign currency. Is cryptocurrency foreign currency or not? And it's been confirmed by ATO recently that it's not a foreign currency. So SMSF, and when it has a crypto assets, it's just an asset, capital gain asset. They're going to have a look at it later on. Also, we are looking at capital gain account or trading account. When you buy and sell crypto in a self-managed superannuation fund, are you running a business of trading crypto or you just holding crypto? So you're just an investor. This is very important in a self-managed superannuation fund in particular. And we look at the tax, what tax you pay when you have crypto transactions in a self-managed superannuation fund. And we want to begin with most important document, which is a trust deed. Your trust deed must allow crypto in a self-managed superannuation fund. There is no requirement to have a specific point about you can trade crypto, for example, but it must allow crypto. So, for example, it has to have a general provision for assets which are allowed under SIS Act are allowed in a self-managed superannuation fund. If there is a particular provision where, for example, some assets like crypto is prohibited, then you will need to have a look at reviewing your trust deed. Because all the trust deed, they might have a particular provisions for certain assets. For example, they might have a provisions that only shares and property allowed. They might have other provisions and limitations. So trust deed is something you have to have a look at. And if your trust deed is old, say older than 5 years old, they definitely have to review it. So this is the first thing you have to look at when you want to invest in crypto. like I said, you need to update your trust deed regularly, and the lawyers recommend to update it every 2 to 3 years. Or whenever there is a change of legislation, you definitely need to update your trust deed. The second thing, the most important thing when you want to invest in crypto in a self-managed superannuation fund is investment strategy. Investment strategy, the regulation 409 requires you to regularly review and implement, formulate regular review and implement the investment strategy. What it means for the crypto investors, that crypto must be mentioned in the investment strategy. And in investment strategy, you must consider diversification. So for example, if you invest in crypto only, how do you comply with diversification requirement? So you have to consider risk. Again, crypto is quite a risky and volatile investment. So you have to mention it in your investment strategy. Your investment strategy must be tailored for your particular self-managed superannuation fund. You also have to consider return. So if you want to have higher returns, which I assume you do if you invest in crypto, so you have to mention what type of returns you want to have. And you also have to consider liquidity. So if you put your super in an asset and say in some coin, and you stuck with this coin because you can't sell it because there is no liquidity, how do you comply with your investment strategy? So these are the questions which must be answered when you prepare your investment strategy for your self-managed superannuation fund. Let's have a look at tax in the self-managed superannuation fund. The self-managed superannuation fund is very attractive structure. One of the main reasons is because it has a concessional tax treatment. In the self-managed superannuation fund, you pay only 15% tax at the maximum. So what it means, for example, if you make a capital gain, or if you receive some income from your crypto, the maximum tax you pay is at 15%. It's a concessional tax treatment, and it's most concessional tax treatment amongst other entities in Australia. Also, we have to consider that when you hold the asset, because the cryptocurrency is a capital gain asset, say if you're an investor, it's a capital gain asset. So when you hold the crypto for more than 12 months, you get another concession, which is 5% discount, 33.3% discount, and you pay only 10% tax on your capital gain when you sell your crypto. Also, there is a possibility to pay 0% tax in self-managed superannuation fund. This is not a topic of this particular webinar, but there is the tax goes to 0% when the members move to the retirement stage. And to move to the retirement stage, you have to reach a certain age and meet the other condition of release. But once you reach the certain age, which is 60 years old for most of people, most of us, the people who were born after 1st of July 1964, it's a 60 years old, and you have to meet the other condition of release, and the tax you're paying on your crypto is 0. So imagine you, for example, you buy coin and then you sell it in some period of time and you make a massive capital gain and you pay 0 if your coin is in a self-managed superannuation fund.
The hardest part is actually getting to the age, right? with a bit of sanity.
Yeah, one of those things, you know, like when you think, oh, I'm actually getting older, cool. So I can use this opportunity to make money and to pay 0 tax.
Yep, so there's a bit of light at the end of the tunnel. That's good.
Yeah, so when you think about tax and self-managed superannuation fund and how much tax you pay on crypto transactions, it's exactly the same like in all other entities. For example, when you sell crypto, you pay tax. Again, you pay, depends on if you hold it for more than 12 months, you pay 15%. If you hold it for more than 12 months, you pay 10% tax. When you swap coins, one coin to another coin, again, it's considered to be buy and sell. So you pay tax on at the moment when you swap one coin to another coin. When you stake coins, it's an ordinary income, so it's taxed at 15% as well, all your staking rewards. When you, for example, if you have airdrops, if you have a chain split, again, you pay tax on it. So it's exactly the same like in all other entities. If it's a taxable event, you have to pay tax on it. The only difference is the tax is 15%, 10%, or the 0%, depending on which situation you are at.
Yep. And the lost and theft crypto?
This is a little bit tricky because especially when you think about it's very easy to lose crypto or, to become a victim or some thefts. So when you lose crypto in a self-managed superannuation fund, you have to have a proof that this particular coins, they were lost. So because when you have a self-managed superannuation fund, it has to be audited every year. And the auditor, they will ask for the proof of this lost transaction. So you can't write it off unless you have a proof that this was a result of theft, or this was a result of a loss, or some other, like issue. So what the proof could be, for example, if you lost a coin because of some, say some trading company or some stock exchange, crypto exchange got hacked. So obviously this will be a well-known event. So the proof will be that this exchange or this particular company is went down or got hacked, and this will be in the media, so the auditor can have a proof that this event happened. So, or it will be on a watchdog list, for example, the company who you trusted with your crypto. So that sort of like proof you need to provide to the auditor, not just, oh, I've lost my wallet, or I've lost my password to my wallet. It's not going to be enough for the auditor because the auditor will consider it as an early access to your super. So what the auditor will do, they will qualify the audit report because it will be considered that you actually transfer these coins to yourself. So unless you have, like the substantial, like I said, evidence that this was lost due to the theft or, yeah.
Yeah, we have the same issue in tax, actually. Sometimes providing that substantiation supporting material for cryptocurrency that's been subject to being lost, stolen, or subject to fraud, it's quite difficult to do so. We prepare declarations for our clients to sign as to the events that the declarations stipulate to the events, the quantity of the token that's been lost, and the value as at the time it's been stolen. But sometimes it's very difficult to do so. So a lot of people actually are subject to, having wallets that become breached, and it could be that it's been connected to a mirror exchange or a mirrored DEX, and the wallet's been connected to it, and then all of a sudden the assets are bled dry from the wallet. It's very difficult to show just from the transaction history of that particular wallet that was done by someone else. You probably have to substantiate by the address of where it's going to, and then checking the address to see some of the other activity, if it's consistent with what you would assume a hacker to be. But then again, that's a bit convoluted as well, because we can set up wallets anonymously. So these are all big challenges, but these are probably more problems for the auditors. There's only so much we can do is to substantiate that, because in a self-managed super fund, the biggest risk there is whether or not the beneficiary of the super fund or the owner of the super fund is just trying to withhold or take out funds, going around the back door to do so. So that's an interesting one. Hopefully we get more guidance on that, specifically with self-managed super funds, because it's a very particular area where we do need to substantiate.
Yeah, that's right. And also the difference between, for example, other entities or individual wallets and self-managed superannuation fund, that even if you prove that this was a breach, for example, and this money was stolen, the auditors still can qualify the audit report because of Section 62, the sole purpose test. So basically the main purpose for superannuation, like I mentioned before, is to have money for your retirement. And if you are risking, and if you invest in risky coins, or if you use the wallets which are not protected, again, the auditor might consider that you actually don't care about your superannuation and you breaching, excuse me, you breaching this rule of sole purpose test. So this is a difference. So from tax point of view, you might not pay tax on these coins, but from compliance point of view, the auditor still might qualify the audit report because you didn't provide the due diligence and yeah.
Yeah, no, all good.
Penalties and breaches. So when you do something wrong in a self-managed superannuation fund, when you breach the SIS Act, and there are particular articles which people usually breach with crypto, the ATO might impose the administrative penalties. And the most penalties between 20 and 60 penalty units. The penalty unit is $222. And it's actually going up on the 1st of January to $275. So you have to keep in mind, so if you breach the SIS Act, if you breach the rules in the self-managed superannuation fund, you might incur the penalties from ATO. And when you think about 60 units, it's like multiplied by 222, it's a $13,000, more than $13,000 per breach, per event. For example, if you've done it a few times during a year, so, and per trustee. So if you've done it a few times during a year, so every single time you breach the law, it will be that type of penalty. And per trustee. So if, for example, if you have individual trustees, not a corporate trustee like we usually recommend, it means the penalty will be per trustee. So you have to keep in mind when you invest in a self-managed superannuation fund, and obviously consult with your tax agent, with your accountant or your advisor. So before you start investing, I would say. So let's have a look at the exchanges and wallets. We recommend that in a self-managed superannuation fund, you use the Australian exchanges, centralized exchanges, which you can open the exchange under SMSF name and have a clear SMSF name on the account. Only Australian exchanges will provide you this opportunity to open a name under SMSF. However, you are not prohibited to open exchange in some other country or use a cold or hot wallets. The difference is that it's harder to prove to the auditor that this particular wallet or this particular exchange belongs to the self-managed superannuation fund and was open for self-managed superannuation fund. This is somewhere where we have to work harder to prove to the auditor, because if there is no name on the wallet, and most wallets, as far as I know, they don't have, you can't put the SMSF name on it. So then you have to have a trustee declaration to confirm that this wallet, this particular wallet, or this particular account on some exchange, they belong to the superannuation fund. So you can add, if you're very techy, so there is a opportunity to add name to the address on your wallet. However, it's very techy, and it's you need to know how to add name. So, but you can add name of a self-managed superannuation fund. Otherwise, what we do usually for our clients, we put a trustee declaration confirming that this particular exchange and this particular wallet were open for the self-managed superannuation fund and belongs to the self-managed superannuation fund. However, you have to keep in mind that once you start mixing the coins, for example, by accident, you transfer your personal coins into the self-managed superannuation fund coins, or vice versa. This is where the trouble begins, because then once the coins are mixed, it's very hard to prove that this particular wallet or account belongs to the self-managed superannuation fund.
We've gone through this process with a number of clients, and it's an absolute nightmare. It's a matter of pulling teeth, and I would not recommend it by anybody whatsoever. So it's always very important to seek the advice before going down the route of investing in crypto, especially in a self-managed super fund. And if you're currently doing it, it's worth having a quick chat, a quick consultation with a professional to see whether or not what you're doing is all above board. rather than find out, at the 11th hour, end of financial year, everything needs to be submitted, needs to get audited, and it's just an absolute shambles.
That's right. That's correct. And this is in particular with the clients, because I come across a lot of clients who mix the coins and make other mistakes and other breaches. This particular clients, they come to me after, for example, they open SMSF with the online provider, do it yourself option, and there is no advice, there is no guidance. There is, like they don't know the rules, they breach the rules, and then we have to fix it after they breach the rules and after audit qualifies them. But the ATO is getting on top of crypto in SMSF, and they started penalizing the trustees for breaches. This is what I've noticed in the last 6 months.
It's like getting into a car, not knowing the road rules, and then just putting your foot down, going flat, and you got the police behind you. In this instance, the police would be the ATO. Yeah, very important to get the right advice. And also, setting up these entities, whilst it's fantastic, it does present an attractive sort of cost-saving proposition doing it online. But without the advice, without it being done correctly, you're really setting yourself up to failure. That's just from the experience working with clients resolving these matters. It's best to have a chat, organize these things properly, and get the right advice.
Yeah, it's much more expensive to fix it. Like you're saving money on setting it up and not having advisor, not having accountant looking and guiding you and looking after you and guiding you. And then it's much more expensive to pay after, and you will pay after, because crypto, especially in SMSF, it's a very complex area.
Yep.
So let's have a look at a number of transactions in self-managed superannuation fund. As a general rule, we recommend, again, I'm not providing you advice here. We recommend to use the strategy buy and keep. So what it means you can do crazy trading, you can do whatever you want outside of super. And Jonathan, I'm pretty sure will be able to assist you with any crazy transactions you want to have. However, in the self-managed superannuation fund, so you have to keep it simple and you have to keep it safe. So what it means if, for example, if you buy and sell all the time and you come to me and you have 1,000 transactions, because don't forget that when you want to buy 10 coins, it's not one transaction. It could be on exchange. It could be 20, 50 transactions, because the exchange matches you with the seller, buyer and seller. So when you come and you have thousands of transactions, and every transaction has to be done manually very often, because of nature of the transaction, of scripted transactions, and SMSF software is not able to provide you like a screen line from the exchanges. Only few exchanges have you can download only from few exchanges you can download the transaction report straight into the SMSF software. Most exchanges will provide you with CSV file, and this CSV file again needs to be uploaded manually, and a lot of crypto coins market value we need to find out again manually. So why is that? Because again, there are thousands of coins around, and SMSF software is it's not like up to date, but they're a little bit behind in terms of technology. So they're a little bit behind of having all the coins on board. So a lot of manual processing. So when you process your transactions, imagine like having thousands of transactions, it's impossible to do it. So what we use the coin tracking software, for example, or we just try to bulk these transactions into lesser transactions. So what it means for the auditor, when the auditor conducts the audit, they have to check, they have to do sample checking of the transactions, they have to do checking of coin existence. And when they have thousands of transactions, most auditors, 99% auditors, will qualify the audit report, part A of audit report, saying that I cannot confirm that this transactions had place. That's it. They automatically qualify because of number of transactions. They can't find the proof. They don't have time to find the proof. I understand they can go through, say, 10,000 transactions. They need to do sampling of 1,000 transactions. It's impossible for that type of fees, unless you want to pay, 20,000 fees for the audit and the same amount of fees for accounting. So this is again the difference between SMSF accounting and other entities. With other entities, you can use the coin tracking software. You can download the report. Once it's reconciled, once you fix all the errors, you have your capital gain, you have your income from staking and rewards, and you can work with your accountant, and they can use these numbers in your tax return. With SMSF, we have to put every single transaction into the software, and we have to prove it to the auditor, and they have to check it. So yeah, this is why number of transactions matter. So keeping records. With crypto, as you know, the most important part of investing in crypto, one of the most important part is keeping records. The same with other entities, and SMSF is the same requirements. However, it's even more rigid requirement to keep your records, because again, the SMSF tax return and SMSF financials, they have to be audited every year, and the auditor must obtain the proof of coins of their existence at 30th of June each year, of their market value, what each coin market value was at 30th of June each year, and also some transactions which happen buy, sells, capital gain. So the keeping the records of all the transactions is very important. Most of exchanges provide you with at least CSV file. Most of wallets will have CSV file as well, which you can download with the transactions. But you have to keep in mind with the CSV file, it's an Excel spreadsheet. Everyone can change it. So what it means it's not a proof for the auditor that this transaction happened. The auditor has to go and if they want to do the proper audit, they will go and check the address of, again, sample of the transactions. They will check the addresses for these wallets. They will check the addresses for the transactions to make sure this transaction happened. So, however, we recommend, which is why we recommend to use the Australian exchanges, because they provide the end of financial year report. They provide the better report for taxation purposes. However, if you want to use the exchanges and hot or cold wallets, again, you need to have a proof of transactions, not only the CSV file, but also your own type of records, sort of like spreadsheets. You have to remember where you sent your coins or where you received them from. In case if auditor will ask you the questions, you have the proof of all these transactions. And you have to have a proof of coins existence at 30th of June. Most of the wallets will not have this type of reports. For example, I can't go to Trezor wallet and or MetaMask say and have a look what coins I had at 30th of June. So what you need to do at 30th of June, obviously you need to log into your wallet and you need to have at least a screenshot showing your coins at 30th of June. So this is the most simple thing. However, like I said, like keeping records, it's even more important in SMSFs, because SMSFs, they get audited every year. So again, I will repeat. So the annual reports, which will show transaction history and holding statements. Most Australian tax crypto exchanges will have it. If we don't have if you don't have this type of report, say if you have a cold or hot wallet, if you have exchange which is not based in Australia, so we'll have to have a declaration of trust where as a trustee you sign a declaration stating that you had such and such coins at 30th of June. However, it's not enough. You also have to state the addresses of these coins, so the auditor can go online and check the existence of these coins and check the history online. But again, mind you, if you have 20, 30, 50 coins, the auditor will not have the capacity to go and check your coins online. Otherwise, they'll have to charge you high fees. The most likely, if you have a lot of transactions, if you have a lot of coins, the auditor will qualify a report because they are unable to get the proof of these coins being in a self-managed superannuation fund. So you have to have transaction IDs again, wallet addresses, and declaration of trust if you don't have it. Yeah. Okay, crypto coin tracking software, as I mentioned before, it's a great tool of tracking your coins, where the coins went, what you received, matching them together and getting some sort of like report. Most of the crypto coin tracking software still have bugs, so you still have to manually adjust the transactions. You have errors. Very often you have errors. You don't have the prices for some coins again because so many coins and they can't keep up with all these new coins. So this is a great tool and it helps us as accountants, you know, like it helps us a lot. However, for the auditor, it's useless because there are 3 reasons why the auditors will never accept the coin tracking software. Coin tracking software, you can change, you can log in and change the nature of transaction. You can say it's gift, you can change the transaction. So you can manipulate the report. The second, the crypto coin tracking software, they're not getting audited by the independent auditor. Say if we are getting reports from ComSec or NAPTrade, they are audited every year to make sure that software on the background, the software is working correctly. So they do have reports from PwC or KPMG. Coin tracking software, they don't have this type of reports. So the auditors do not accept the coin tracking software's report as a proof of transactions and as a proof of the coins. Like I said, it's a great tool for accountants, but useless for the auditors. NFTs. I included NFTs as in this presentation because it's a hot topic. I think it's the hottest topic at the moment in the crypto space. And with NFTs, you can potentially, you know, you can invest with your self-managed superannuation fund with your super. However, you have to keep in mind a few things. Again, trust deed. You have to check that it's allowed under trust deed or at least not prohibited. You have to make sure that you mention it specifically in their investment strategy. And you have to, the difficulty with NFT that firstly, you have to prove the existence at 30th of June. So if you keep your NFT somewhere outside of exchange, you will need to prove to the auditor the existence and you will need to prove to the auditor the market value. NFTs are very unique. So if one Bitcoin is the same like other Bitcoin, so with NFTs, they are not the same. So to find the market value, it could be very difficult. And you need to provide the market value for every 30th of June. So what it means that every year you'll need to provide a proof, where did you get this market valuation from? So this could be difficult. And also you cannot use it for the personal enjoyment. As any superannuation assets, you cannot enjoy it until you retire. So for example, if you buy NFT for gambling, for example, so then it will definitely be breached. So you cannot enjoy this in NFT until you retire. So this is something to keep in mind as well. So yeah, potentially yes, but a lot of hurdles you have to go through.
I think the very nature of NFTs, especially in the GameFi space, is, you know, for use, there's an act of joying with holding particular NFTs. So depending on what kind of NFT it is, it could be relatively high risk of breach. So maybe it would be more advisable to stand clear, although not impossible to invest in and get it done right. In a self-managed super fund, it's probably prudent not to, especially with all the other risks associated with crypto. In a self-managed super fund, just pays to get it right and limit the exposure.
That's right. Just try to do all these, exciting things outside of super, and that's it. And keep it simple in a superannuation fund.
Yeah.
All right. So again, let's talk about challenges of investing in crypto in a self-managed superannuation fund. Your trust deed and investment strategy needs to be prepared by professionals. You definitely need help with investment strategy. We cannot do the investment. We cannot prepare the investment strategy for you because it will be considered as investment advice. And by the way, a cryptocurrency, it's not financial product. So no advisor in Australia are able to advise you on the crypto. So what it means if you go to your financial advisor and ask them, oh, can I invest in crypto? What crypto would you recommend? They can't open their mouth and talk about crypto because it's not financial product. So with investment strategy, again, if you want to invest in crypto, you have to formulate investment strategy yourself. But we as a professionals, we definitely can help you with investment strategy. Second rule to remember is you have to have an SMSF name on the account. So any wallet, any exchange you use for trading crypto or buying crypto in a self-managed superannuation fund must have a SMSF name. If there is no name, you have to dedicate this particular wallet or this particular account to SMSF only and provide a declaration of trust that this account is owned by a self-managed superannuation fund. And rule number 3, very important rule, you keep SMSF coins separately. It's very easy, and I've seen it a lot. Many times clients come and they mix their own coins and with SMSF coins, because when you start trading, you just have so many accounts and wallets, you just mix it by accident. Once it's mixed, it's a nightmare to separate them. So definitely there is a breach. Definitely there is a qualification from the auditor, and obviously it will be flagged. Once you have qualification from the auditor, the SMSF will be flagged with ATO. And if you continue doing these things, it will be the consequences, and not the pleasant consequences at the moment. Okay, case study, what not to do in the self-managed superannuation fund. This is actually a very funny case study, because when I put it first, I've got a couple of people approaching me, my clients, and saying, oh, why did you put my name on it? So I had to change the name on my case study. And I said to them, look, I didn't put your name on it. It's not only, I have 30 clients with exactly similar scenario, what not to do in a self-managed superannuation fund. So it's not because you are John or Michael or Steve. I just put a random name, but a couple of clients thought that this is because of them, and because they've done it, I put this name on. So okay, let's call this person John. So John came to me. John like with H. John came to me. He invested in cryptocurrency. He opened self-managed superannuation fund online. He bought all his crypto. He opened a few wallets, a few exchanges. And as you know, with crypto, you go, it goes up and down, and you get excited and you get upset. So in this roller coaster, he his personal coins with SMSF coins, of course, because it's all over the place when you go up and down, get excited and then get, frustrated. So all these things happening, and he didn't have any idea that he had to have a account dedicated to SMSF only. He didn't have any idea that he could not mix the coins. A lot of rules which he breached. He didn't have any idea why, because he opened account online. He had online provider, administrator, which, by the way, doing a great job. I have nothing to do, I have nothing against them. It's just, that when you have something complex like crypto, you definitely need to get the guidance from accountant who knows what the crypto is and how to deal with crypto. So anyway, so what we had to do, the auditor qualified the report because of few breaches. It was boring. It was using SMSF for like personal use, because obviously he took the coins out into his personal wallet and then he put them back. He transferred them back. So separation of assets, so quite a few breaches. He was lucky enough because he found me, so who was able to work with ETO to rectify the breaches, to fix all the wallets, fix all the exchanges, have only SMSF money in it. And also lucky enough, John was at the age where he could enjoy 0% tax on his superannuation income and capital gains. So now John is investing and asking me questions every time when he wants to do something like open another account in some exchange or invest in some exotic, I would say, coins or exotic assets. He always calls me and asks me questions. So, but the thing is that we needed to engage with ETO and work with ETO to prove that all the breaches were rectified, and going forward, John is not going to do the same things again, and he understands the rules, he knows the rules. So it's very important to work with ETO and to work with your advisor or your accountant. So as a conclusion with crypto, what not to do in SMSF. So you cannot use other than SMSF account. So you cannot use your personal account, a crypto account, to trade crypto. You have to have a good record keeping. So if you don't have your records, if you lost your password, if you don't remember your wallet address, and if like you lost it all, it means it is going to be a breach and it's going to be qualified. Investment strategy. If your investment strategy is generic, if it doesn't mention crypto, if it doesn't mention other things, which it must mention, diversification, risk, return, liquidity, this investment strategy is not accepted by ETO, and it's going to be breached and it's going to be reported to ETO. Use multiple exchanges and wallets. Why I put this here? Because again, you can have few exchanges and few wallets, but once you start having, say, more than 3-4 exchanges and wallets, you will get lost yourself. So, and try to then match them all together, and yeah, so it's going to be hard for us, and it's going to be hard for the auditor. The most important thing that you have to show to the auditor and prove to the auditor that all these transactions happen and all these exchanges and wallets belong to the super fund. Mixed coins with personal funds, personal coins, very big mistake, and actually very common mistake. Also, with the crypto assets, you cannot buy crypto from yourself. So, for example, if you move your personal cryptocurrency into the self-managed superannuation fund account and say, I'm just buying it from myself, you cannot buy crypto from yourself. So you can buy it from exchange, but you cannot buy it from yourself. You have to remember, so it will be a breach as well if you do these things. Risk and sole purpose test. Again, you have to remember, if you taking high risks and if you're losing because you invested in very risky coins and all your coins say You had $100,000, you invested, it all went to zero because you invested in some tokens which never eventuated. So the auditor might qualify it again because of sole purpose test. Because did you think about your retirement when you invested in all these risky coins, small coins? Again, if you want to do it outside of super. Do whatever you want or whatever you want outside your super fund. So again, there are hefty fines and penalty unit went up. Is going up on the 1st of January 2023. So think about paying 13 grand for the breach, and each breach. So it's it could be painful. All right. So how can we help you to stay compliant? As your advisor, as your tax advisor, not financial advisor, and as your tax agent, specialist in self-managed superannuation fund, we guide you, we hold your hand. You can call us anytime and ask questions about, for example, and we're always happy to answer. If it's a technical question, we can't provide advice, but with any technical question, we can advise you if you should do it or you should not do it, or how to do it properly. But again, it's from the technical point of view, not investment advice point of view. So we can answer you any technical or compliance questions you have, not only about crypto, but about anything in self-managed superannuation fund, anything about super. We assist you with investment strategy. Again, we don't prepare it for you. You're going to do it yourself as you are meant to, but we assist you with investment strategy. And also, if you're in trouble with VTO, if you already had a breach, it's better to come forward. It's better to work with VTO, and we help you. We do have a lot of clients who had the breaches, who didn't know what to do. They didn't know how to engage and work with VTO, and we help them with rectification of their issues as well.
Yeah. So self-managed super funds are part of an overall tax structuring strategy for most clients, most taxpayers. With any sort of extensive degree or any degree really of an asset portfolio, especially ones that can generate a significant amount of wealth in a short period of time, needs to be looked at with very careful consideration for what structuring options are available for the most, effective outcome. Self-managed super funds, definitely one of them. There are others as well, such as companies, trusts, partnerships, and things like that. So just want to quickly discuss trust and company structures and how they can be used to suit your affairs. It's very important to note, though, before we go into detail with some other structuring options, that not all size fits all. These are sort of general instances where one's more ideal than others. Really, it depends on your personal circumstances. And that's part of what we look at as well. When we have tax structuring consultations or chats about what your goals, aspirations are for the next 3 to 5 years, 10 years, how can we fit a structure in place to cater for a prolonged period of time, or whatever your immediate goals are or long-term goals are. So looking at trust structures with ideally a corporate trustee. So the use of trust offers flexibility in tax planning each year. So with the discretion as to who will be assessed on the taxable income from the trust. Trust makes a whole bunch of taxable income because the portfolio does well. There can be a significant amount of disposals. Now the decision is at the end of the year as to how we're actually going to distribute that for tax purposes amongst the beneficiaries. So through effective tax planning and distributing that income from the trust, income earners within the family group can save thousands of tax liabilities as we take advantage of multiple different marginal tax rates. So really the correct trust structure can provide asset protection as well, particularly if there is a corporate trustee of the trust where the assets are held by a separate legal entity, as well as there can be benefits of utilizing the 50% CGT discount as well amongst eligible beneficiaries. So if the trust makes a gain on an asset that's been held for more than 12 months, an eligible beneficiary can discount that as if they had made it in their personal capacity when they hadn't. This is not allowed for company beneficiaries, so careful consideration there needs to be applied when your accountant does tax planning. So really, trusts are ideal for long-term wealth creation. Any holdings that passively generate income ideally put within trust structures. Again, consideration needs to be placed for personal affairs. If income levels are relatively low, then it might not be worthwhile going through this exercise. Where income levels are higher or anticipated growth targets are quite high, having it in a tax-effective environment is going to yield fantastic results and should be heavily considered. So companies, everyone knows, or most people know, sorry, that companies incur a flat corporate tax rate. So the benefit there is actually capping that amount. Also segregating the assets within the company because it's segregated by a separate legal entity. Retaining the profits as well is very, very feasible for high net worth individuals where income levels for individuals within family groups are quite high, where we can cap the amount of tax that's paid on the income by using a company and not incurring tax, say at 45%, we can cap it at say 30. If it's a base rate entity, there's potential there that it could even be lower. So depending on where we're at within the family group and the situation of the family group, this can save a tremendous amount in tax liabilities just by moving your affairs somewhere else that's not in your personal capacity and really taking advantage every single financial year when we look at situations like this. Also, the benefits of companies are, because we can retain the profits, we can obviously distribute them when it's feasible to do so. So it's our discretion, or it's the discretion of the directors as to when they're actually going to declare a dividend to be paid to the shareholders. And it can be done when income levels are slightly lower, right? So it doesn't make much sense to declare a dividend when income levels are significantly high, quite high, say they're over 150,000, probably unlikely to do so. With the exception for some particular outlying circumstances, which won't go into too much detail today. They do exist. Yeah. So that concludes today's content delivery. I can see here we've got some questions that have been raised. I have humbly left these for you, Natalia, because these seem to relate specifically to self-managed super funds. I don't want to misadvise. But if anyone else has any other queries, concerns, comments that they would like to make for discussion, please feel free to drop a line. Yeah, Natalia, can you see the questions here? Would you like me to read them out?
No, I can see the question. So what is the tax implication when crypto are transferred from personal to SMSF and vice versa? It's not about tax implications, sorry. It's about SIS complications. Because you breach SIS Act, you cannot transfer crypto from your personal, from your personal name to SMSF, because SMSF cannot buy crypto from you, and also you cannot contribute it. So it has to be done through exchange. So if you want to have crypto in your SMSF, you have to buy it from the exchange, from the third party. So there is definitely going to be breach. So you're mixing your own money and SMSF's money. I have TPD released, but it rolled over. It's preserved in 2020 in ERA. The current SMSF auditor is amending 2021 as unrestricted, non-preserved. They stated today that it's only matters when funds need to be released. Look, David, this is a question about TPD. It's more about like, it's a tax question. And I think, like I can't answer it within this webinar. So if you want to find out more, you have to contact me directly. So we'll have
the contact details for Fullstack and Easy Crypto at the end. So if there's anything that needs to be taken offline, or some a question maybe that you would like to ask more discreetly, there's channels to do that. We'll bring up those slides shortly.
Yeah, it's a complex question. It's a complex question which I can't answer just in two sentences. The auditors, Christopher asking, the auditors can claim you fake a screenshot as well. At some point there needs to be trust. Of course, with the screenshots, it's just one of the proof we provide to the auditor. The other one is transaction IDs, the addresses for the wallets, and this is where auditor can go online. The same with your HIN, for example, if you trade shares, the auditor can go online and they can check it. However, if you have too many transactions, then again, the auditor is not going to do so. But screenshot helps. It definitely helps to at least, you know, you have the balances at 30th of June. And plus, like I said, transaction ID and address ID. Adrian is asking, hello, Word. Okay, thank you.
Hey, Adrian. How's it going, mate?
Daphne is asking, do you know how trading profits in a PAMM account is taxed? What is a PAMM account? So if you tell me what PAMM account, I will be able to answer it.
Is that a particular type of trading account?
So, but basically, I think, you know, I know the answer because everything needs to be converted to Australian dollars. If you trade in USD, if you trade crypto to crypto, withdrawal in crypto, this is everything needs to be converted into Australian dollars at the moment when you say withdraw, when you swap, when you buy and sell. So what it means manual work for your accountant. So yeah.
There's an anonymous question here. Why are trading fees, CoinSpot fees, not a deduction or business expense? I'll answer this one. So this is an interesting one. So coin tracking software, like if a taxpayer is going to incur a significant number of transactions, the coin tracking software is going to pick it up one or two ways. It's going to pick it up as a fee, or it's going to be capitalized. And either or, like, they're both really correct. Like I mean, the end result is pretty much the exact same. With fees, if you consider holding a particular crypto token and you swap it for another token, what actually happens is you have the fee which gets incurred as a result of the transaction, which is it gets capitalized for the cost of the asset that's being swapped to. So say Ethereum to say Dogecoin, there may be a transaction fee associated to that. So it's not necessarily always going to show up as a deduction, it could be capitalized. The issue as accountants, as we see it, is to rectify every single one of those transactions is not economical. And I haven't found a client that would be willing to pay for that because the implications tax-wise don't really change a great deal. We do understand that some of our clients have a significant amount of fees. And as a result of that, you know, careful consideration needs to be applied for a per case basis. But in that particular instance, it was shown correctly. And we offset those fees against the overall capital gains for the reason being that it should be capitalized. If it's a trading affairs, then yes, it would be treated as an expense and claimed as a deduction.
Okay. Yeah, Daphne said it's a PAM, it's a broker. Yeah, the same like if like I answered before, it has to be converted any transaction to Australian dollars. So, and Daphne also asking, can be withdrawn to bank and invested in more traditional assets? Potentially, it can. So if this asset is allowed under SIS Act, but once you withdraw to the bank, it means you sell the asset. You have to understand that this is a taxable event and tax is paid on this transaction. What percentage of total, Robert is asking, what percentage of total SMSF would you recommend? This type of question is a question to the financial advisor. And this is where, like I said, no financial advisor in this country is able to provide you this answer, because they are not allowed to talk about crypto. It's not a financial product. And when we're talking about percentages, it's a financial advice. Unfortunately, it's your decision. We can help you technically, we can guide you. However, we can help you with tax optimization, but it's your decision where you want to invest, or which coins, and what percentage of your super you want to invest. So, but as per ATO and ASIC, they want to see SMSFs investing more conservatively. If you invest in crypto, think about sole purpose test. You have to keep your super for your retirement. So invest crazily outside of super. Ask Jonathan. He will be able to help you with all your ideas, like how to make money.
I think we'll wrap up the Q&A session for today. I was just quite, you'll notice that I'm not present on this. I obviously wasn't able to make the photo shoot, or I wasn't important enough.
It's not me.
No hurt feelings here. But yeah, if you guys have any other queries or concerns, anything that you would like to have a confidential discussion about regarding your affairs, our channels of communication are here. So you can schedule an appointment straight into our Calendly links. You can send an email to a team at Fullstack, and we have staff that monitor that, and it will go to the correct person. Yeah, you can also drop us a line, have a look at our website. We do have a lot of articles that we post, a lot of online resources available for crypto related content. So there's definitely something there for everybody. Yeah, and we have Natalia. If you want to reach out to Natalia, here are the methods of or channels of communication there. I'm sure Natalia has a preference. It's probably at this busy period of the financial year, I'm sure bookings are preferred as opposed to cold calls, but really.
That's right.
Yeah.
So you can always send us email, and on our website we have a lot of information as well about self-managed superannuation funds. We have our YouTube channel, and you can check our blogs. It's all about super. And one of the hot topics is crypto, because we do have a lot of clients, and we help clients with crypto and self-managed superannuation funds. So,
yeah, cool. All right, thanks everyone for attending. Have a lovely afternoon, evening. Have a lovely weekend. Drink responsibly and take it easy. All right, guys, we are out. Thank you very much.
Thank you, guys. See you. Thank you.